to solve publication question. All right. So the first thing you do in the exam hall is that you'll be given 15 minutes for reading. So in that 15 minutes, the first thing you do, for example, you go to the question and you read the requirement. So you see in the requirement here that you are supposed to prepare P&L for the reporting and also the balance sheet. Now, you have 20 pages in your answer booklet, 20 pages, which means that you are answering 5 questions, meaning that every one question should take 4 pages. But it doesn't mean, say, you are supposed to restrict yourself to 4 pages. If you have to use 5 pages, use, because if you need extra sheet, they will give it to you. So that is that. That is that. So now when it comes to the publication questions, if you know you are going to prepare a P&L, you don't wait. P&L, you write your P&L format down. You write it down without even reading the question. Write it down. So that is that. So we know that per IAS 1, P&L, we will need the name of the company. Here we are fortunate to know is the reporting.
The question, I use the test.
Yeah, it's the textbook.
Okay, I have it, so I want to open it.
Yeah, page 201. Okay. Then you write statement of profit or loss. Statement of profit or loss for the year ended. And this question, we were supposed to do it as at 31st May 2017. All right, so you underline it. Then immediately you put up your currency sign. So put up your currency sign. All right, then you write the things here. You know every P&L will start with revenue. So don't read the question, and what shall I say? P&L,
okay.
Do cost, then cost of sales. You do those things now, you get gross profit. Then you know your expenses. If there is other income, you add other income, other trading income.
Yes, sir.
All right, other trading income. Then the expenses are selling and distribution. You have administrative expense. So you don't even read the question, you do this thing down. Research expense.
Oh, okay.
After that, you know when you deduct everything, you have operating profit or profit before interest and tax, whichever name you want to give it. Then you come here with investment income, finance cost, then profit before tax. Then immediately you less tax, then you get your profit after tax. So when you finish, there is OCI, you add OCI. The things that will come to your OCI at level 2 is just revaluation surplus. Then deferred tax on revaluation surplus. So you do this thing down without even reading the question. That is what you do. That is what you do. So we don't waste time at all. So by within two minutes or 3 minutes, you have finished writing this thing down without even reading the question. Then you now come and read the question. Okay. You now come and read the question. Now, if we glance through the question, we see revenue, cost of sales, admin, you see all these things. All these ones will give you an idea of PP, all these things. PP, you have trade receivable, inventory, bank, trade payable, share, ordinary shares, share premium, bank loan, retained earnings. You see all those things. Then you go through your notes. You just read the notes. Immediately you finish reading, you develop your balance sheet template. So the next thing for us to do is to develop our balance sheet template. So the same thing, you have the reporting. Then we have statement of financial position. As at 31st May 2017. You underline that one. So from your reading, you realize that, so as for these things, normally we use only one currency sign. You realize that you have your NCA, and from the NCA, you saw that there is a PPE. Then you leave like 2-3 space, because apart from the PPE, you didn't see anything, but something might come up. So leave like 2-3 space, then come to your CA. As for your CA, you have inventory, you saw it in there. You have receivables was in there. Then you have bank. All right. Then you leave like 2-3 space down. Then you come to equity. The equity part, you have ordinary shares. You have share premium. You see it in there. You will definitely have retained earnings or any revaluation surplus to you bring, if there is any. Then you come in with your retained earnings. All right. Then you leave 2-3 space because something might come up. Leave 2 or 3 space. Then you come to your NCL. So I come to my NCL. You saw here there is bank loan. So bank loan. If there is any other thing you bring back, because you don't see any other thing, you leave 2-3 space. Just like that, then you come to your CL. CL, the things you know always are trade payable, then taxation. Something might come again, so you leave 2-3 space. So that is how you do that. You do all these things down. Then once you are done doing this thing, you now come and read the footnote. You read the footnote. And the footnote, key number 1, I told you guys the last time that footnotes are treated twice. You have a leg of the footnote in the balance sheet. You have a leg of the footnote in the P&L. So just be mindful. So now what we are going to do is to solve the footnote. Okay. So let's go to the footnote and solve the footnote. Use the footnote to be your workings number. So that is that. So if we are solving this, then so this one is 1 page. This one, you do this one in 1 page. You do this one too in another page. Say beko page, the following page, and so on, no problem. So that is that. But the remaining 2 pages or 1.5 page left, you are going to use that thing as your workings. So workings. Then the workings too, you are going to use this thing, use this as your workings number. All right. So for example, you pick so you do workings like this, and you have to show the workings. So workings 1 will be for note 1. And so here we are told that the owned plant and equipment is to be depreciated on reducing balance at a rate of 20%. I said that the property includes land at a cost of 60 at the beginning. All right. Sorry, at a cost of 60. The building is depreciated over 30 years straight line basis. All depreciation are charged to cost of sales. So the point 1 is about the plant and the building and the land. So what do? You come here, you say plant. All right, plant and equipment. There is also land, and there's also a property. So that is what you do, property. Okay, you are told. So here you see that the plant and equipment, the cost is 140. Then you have accumulated. Accumulated depreciation is, as at this time, June, is 48.
You made them to do some adjustments. So it was 48,600.
Yeah, 48,600. Thank you very much. So you get this, then 140,000 minus 48,600. That gives me 91,400. Then what is the policy of the current year depreciation? It says that the plant is reducing balance at 20%. So I will do what? 20%. So if I do 0.20 multiplied by that, I have 18,280. So this will go to depreciation. Then I'm using that same thing to find my carrying amount. So that is 91,400. If you minus it, I think you have 73,120. So that is what you have. And this is the carrying amount. So straight away, you have this one down. Then you go to the property. They said that the property is what? How much is the property? The property is costing 240. So cost. But inside that 240 is a land. All right. And don't forget that we don't depreciate land. So you can split these things into two if you want. So you will say that the property is 240. We're taking land 60 Ephraim. So the property you have the building only. So you have the building part. This will be the building part. And this will be the land part. So what you have is that you have 180,000 here. You have 60,000 here. Then the accumulated depreciation that you have for the property is 40,000. It will be only for this because we don't depreciate land. So the 40,000 will be only for this. Okay, so that means that we have what? 140,000 here. And what is the depreciation policy for the current year? They said that it has 30 years useful life. So what do? The depreciation will be the 180 all over 30 years. Okay, 180 all over 30 years. All right, because it's on straight line basis. So 180 over 30 years gives me 6,000 a year. So you have to check in the question. If it is 6 months, you do 6 months. All right, so that is what you do. So right now you have 134,000 and the land too is 60,000. We never depreciated it. So the carrying amount, the total carrying amount of the PPE, CA of the PPE is this plus this. All right, so you have 134 plus 60 plus 73, 120. And that is 267, 120. Did you have something like this when you solved it? Oh, we have missed something. So
Yeah, I think that's how I had it.
yeah,
And then
so you create another working for cost of sales, but you won't number that working. Don't number that working. So just write it cost of sales. Don't number it because that will be the last number for your workings. Now you have per trial balance. So cost of sale per trial balance. What is in the trial balance is how much? Where are you? Cost of sales is 324.
24, yeah.
Yeah. Then they said that we should add the depreciations to cost of sales. Okay, so the depreciation. So the depreciation we have for the plant and equipment, we had 18,280. Then for the building, it was 6,000. So you add it here for now. So that is what you do. But immediately you finish this thing, this note that you have done, you don't hesitate. Straight away you go to your balance sheet. Straight away, go to the balance sheet and slot in the 267, 120. Slot it inside. So all you do is come to your balance sheet and say workings 1. So it was what? 247 something. 267, 120. That's why you slot in there. Now the above shame. So you don't waste much time like that. 267. 120. So that is what you slot. All right, so you slot it in fast. Then you come to the note 2. So you have solved note 1. You see, I told you something will go to the balance sheet, something will go to the P&L. We found what goes to the balance sheet. What will go to the P&L is the depreciation, which we have added to the cost of sales, later on, which will go to the P&L. All right, so that is that. Then note 2. So we come to note 2. We solve note 2. So you realize that the note 1 was about a PP. Then note 2 is like on June 16, that's the beginning of the year, Derek commenced an item of plant and machinery under a lease. So right there, you know that there is a lease, IFRS 16. So the lease. And for every lease, what do? You recognize right of use assets, and you do PV of the lease liability. So this is coming from IFRS 16. So that is what will happen. So it says that under the lease agreement, they will pay a 3-annual payment of 29,000. The first payment is made at the end. So this one is lease in arrears. So it means that the first payment will be made in May 2017. Second payment will be made in May 2018. And the last payment will be made in May 2019. So that is what you have there. And it says that that figure, it says the first payment has been charged to cost of sales, which shouldn't be. Payment don't go to cost of sales. Payment don't go to cost of sales. So they said that the first 29,000 has been treated in cost of sales. It shouldn't be treated in cost of sales. All right. So if it has been charged to cost of sales, it means in our cost of sales, we need to remove that particular one. We don't charge payment on lease to cost of sales. It is to cash flow. So we have to deduct that 29,000 error.
I think that this one I didn't treat it.
Aha. So that is that. It's an error. So you have to reverse that error. Okay. So that is that.
Yes.
So what will happen is that the first 29,000, it will rather come here. So we have 29,000 for the first year. How many years is the lease? The lease is 3 years. So 29,000, 29,000, 29,000. Okay, we are going to PV them. We are going to PV them. But it looks as if the question said they have already PV it for us. I said the present value of the lease payment has been done. So the PV we would have done, they've done it for us, which is what? 72,000. They've done it for us, which means that the present value of the lease payment is 72,000. So that is what we have there. And it says that under the lease, Derek had an option to extend the lease indefinitely, all right, at a reduced rent at the end of the 3 years. So listen, if the question says something like this, you have a choice, because from IFRS 16, we said that if the people will extend the lease, then it means that the useful life will change. The useful life will change. Okay, so now the lease liability, the PV of the lease liability is 72,000. That is what we have here. Okay, so therefore the right of use here, we have lease liability payment. PV of the lease liability will be 72,000. So that is that. There is no other payment. But you see, what we will do is the subsequent measurement of this one. So the subsequent measurement of this one is going to be, we are going to depreciate it. Now, the question is that, what is the useful life of the asset itself? The asset itself is 6 years. I wrote 6 years, but please, it's 6 years. And the lease term is what? 3 years. So right now, you solving this question, you can use an assumption that they will extend the lease, or you can use an assumption that they will not extend the lease, because the question never stated whether they will extend the lease, or they will take the option, or they will not take the option. If they will take the option, it means we have to depreciate this thing over 6 years. If they will not take the option, you depreciate it over what? 3 years. So which one did you use?
I use 6 years.
6 years. Okay, so
But
when you
I use the arrangement. I use different the first arrangement that you taught us, the year balance carry forward, the interest payment
yeah,
and
I'm coming
carry
to
forward.
do that. That is the
Oh, okay.
subsequent measurement, but you have to first do this one. Oh,
Well, this one I didn't do.
hi, and yeah, you first have to do the initial measurement anytime there is a lease before you do the
Oh,
subsequent
okay.
measurement.
I did the table straight.
No. So please take note of that, okay? Take note
Okay,
of that because certain things can be added to these figures.
okay, okay.
Yeah. So the
So you need
subsequent measurement, so if you use 6 years, it will be 7,000, 72,000 all over 6 years. Eshla,
so 12,000.
Hello, sir.
when you solve this question, how many years did you use as your depreciation years?
I think I used 3.
Okay, so whichever one you use is correct in this case because the question didn't tell you they will extend it.
Okay.
Please, if you extend it, you use 6 years. If you not extend, you use 3 years. So this one, it left it open. It says that under the lease term, he has the option to extend the lease indefinitely to reduce the rental payment. So please, one can reduce take extension and another one take extension. Who take extension now, you are going to reduce the rental payment. So you have to use common sense to say that obey take extension and therefore use 6 years. So please be careful. Please, this thing is in the lease video. It's there. It's in the lease video. All right. So be careful. The depreciation about 12,000. So right there, you have another lease depreciation, which is going to your cost of sales. All right, which is what? 12,000. That is that. Then the what you did, Hetty, what you did is the subsequent measurement of the lease liability. So you start May 2020, 2017. You start May 2017. All right. Then you have balance brought down. This one is in arrears. So you have 72,000. Then finance cost. What percentage will you use for the finance cost? We have payment. Yes, actually, what percentage will you use for the finance cost? What percentage did you use? Let me even go and open your solution you sent me. This guy, if I give assignment, he doesn't do it. Your other friend, what's the name? What's the name of your other friend in this class? If I give assignment, he doesn't do it. So, Esla, I saw that you did the lease liability. You PV'd it.
Yes.
But did you see that the question had PV'd it for you already at 72,000?
Ah, yes.
So your answer will be distorted. It should be
Mm,
distorted. So please, na say wonnim lease na ma buy a crash say one share bibia biem.
me share you. But I'm in tears.
Oh, the PV has been done. So it means you have to watch your videos very well and understand from the video.
Yes,
Please,
sir.
from now to the exam date, time yourself and think I'm learning some standards. Seriously. Yeah. So that is that. Please, this video that I've done, actually, you were late. I saw your message, but please, I would advise that you go back and watch this video, please,
Yes, sir.
because I'm teaching the approach, and I said something at the beginning, you were not there. So even when you watch the period you have joined, I'll bet me I'm shutting it off. But you see, I have told your friend that you don't start that, you start doing the template down. This template must be in your head all the time. You do it down without answer na wash ade na se kra. Answer na we read the question no kra. This thing must be done.
Okay.
Yes, you must do it down. It is IAS 1. So it's not like it's per the question. Do it down, right? Do everything down. Then when you finish, read the question. When you read the question, you can also develop your balance sheet down. So take time and go share video no be first 15 minutes. You can now shut it off. All right. Now, so where were we? We are here now. And so this one, our carrying amount of the lease will be how much? 60,000. It will be 72,000 minus 12,000. Is that not it? No, when you're 60,000. Let me see what Eshla gave us in her right of use. No, the 5331 because you used 3 years probably. So immediately you get this right of use. Don't wait. Go to your balance sheet, slot it in there, 60,000. The template is already drawn. So you see the 3 space I told you to leave. There is a right of use asset. So it's what? 60,000. So you reference the examiner to workings number 2. That is that. So actually, I also saw that you have done notes and I will throw workings in it. Just do it like this. All right.
Okay.
That is that. So we have that. So we go back to our lease liability table that we were doing. So 72, the implicit rate is what? Implicit rate is 10%. So here will be 7,200. So actually, because you used your own, your figure here was different.
Yes.
Yeah, so and the payment is what? 29,000 all the time. So what will it be? We have 72,000 minus plus 7,200 minus 29,000. So you get 5,200. 5,200. I realize that your balance sheet PPE2 is different. Yeah, that one too. I see some difference in there. But with what I'm seeing, it looks as if you added, wow. Okay, the accumulated depreciation is that. But you didn't do the carrying amounts. You didn't do the carrying amounts. You did the cost part, and you did the accumulated depreciation part, but you didn't do the carrying amount. You didn't subtract the carrying amount from the costs. You didn't do that. So here I'm having 5,200. All right, now that I have 5,200, this one I know is going to my finance cost. So immediately, what I do is that I'll go to and I know this one, I told you that when it is a lease, what do? You do 2 years, right? But
Yes.
Eshla, that one too, you did 1 year. So I think you guys should go back and watch the lease question video very well.
Okay.
So we have 5,200 minus 29,000 plus 50/20. That gives me 26,220. And we said that this one will go to your NCL. And the difference between this and this is arrears, will go to your CL. All these things are there in the video. So 5,200. It means the part that is going to the CL is 23,980. You can take this one fully, but you will lose mass. You lose the mass. Yeah, you lose the mark. So please split it. And so immediately we go to our NCL and our CL, then we do lease liability. So we have the figures here. So you go there. So you see the spaces I told you to leave, you have something to do there. Lease liability. Bakoaha, which is coming from your workings too. And another one, lease liability. Also workings too. This one that we had is 23,980. That is it. Then the one in the NCL was supposed to be how much? 26,220. So you put that one to 26 to 20. And no. So we are done with this. And don't forget, there is part that should go to our finance cost. So immediately we come to our finance cost here. The finance cost here. Finance cost. We put into bracket. Is there any finance cost in the question already? So you look into it. Was there any finance cost? See, this loan interest paid is what? 6,800. It's a loan interest they've done here. Loan interest paid. This one is loan interest. Okay, so that is a finance cost. So finance cost is a loan interest. So 6,800 plus the 7,200 we have worked in our workings too. Loan interest is the same as finance cost. All right. So we add it. When you add it, balance sheet in the 6,800 plus 7,200. That gives me 14,000. That gives me 14,000. So that is what I have. And it's a finance cost, so we will be deducting. So that is that. Then the next note is note what? 3. So that tells us that there is no note on revenue. There is no note. So we can close the things out. Simple, copy and paste. Revenue is 630. We have to go now. There is nothing to do on our cost of sales anymore. Let's close down our cost of sales. What is the total we will have on the cost of sales? So here we had 324,000 plus 18,280 plus 6,000 minus 29,000, the error they did, plus 12,000. So together I have 331,280. So let me see what Eshla had. Ay, So since the notes are 3, we can name our cost of sales workings number 4. Since the footnotes are 3, so the cost of sales is the last working number you give. So we come here, cost of sales working number 4. What was it? It is 331,280. So that is what you do. Then immediately you can find your gross profit, 6 minus 630,000. My gross profit is 298,720. There is no other income. So that is that. Selling and admin expenses. We have distribution expense here, 19,800. We less that. Selling and distribution, 15,600. There is no research expense, so I can get my operating profit. So 19,800 and 15,600. So that gives me 263, 320. Okay, so that is that. So we look into the question, was there any investment income? No, there is no any investment income. So that place will be dashed. Then I have this 14,000 to deduct, which makes it 249,320. Then I have tax to do. The tax note is, I think, is the note 3. Anytime there is a tax note, what do you do? So let's go to workings 3. Because it is note 3. So note 3. All right. What do? We do CT and DT. Okay. So what is the estimate? The estimate they have is what? 7,200. And that will also go to our SPL, our liability side. So immediately, current liability side, immediately you go back, sharp, drop it at your current liability side. Taxation, 7,200. That one there, I saw Eshla has done that. So that is our workings number 4. That is where we are picking it from. Is there any over or under provision in the question? No, I don't think we saw anything like that. We didn't see anything like that. Is there any deferred tax movement? No. So over / under is not there. There is no movement. Movement is also 0. So it means the same 7,200 will be the one going to my SPL. There is nothing on deferred tax. So quickly, I go and slot this one to, hey, I said this one was working 4. It's working 3. So it means I need to correct this. It's working 3. So immediately I go to my tax here too and put in the working 3. 7,200. So if I less 7,200, what do I have? I have 242,120. Let's go to the question. I put the solution somewhere here. Have you seen we've gotten the answer clue?
Yes, sir.
So that is that. There's a reason why I don't solve the question in the book. Because most of you, it has advantages and disadvantages. This is training you. You see, this thing was done immediately. I taught IFRS 16. So it's training you. But when you go to the real publication side of the book, which is like page something going, that one, the solutions are there. But there, this is a trial question. So I wanted to push students. There is no OCI item in this question. So immediately I get this profit after tax. This one, I can go to my retained earnings here, and now do retained earnings. Where is the retained earnings in this question? Retained earnings, the opening retained earnings, and do 15,500 plus my 242,120. So if I add 15,500 to it, my retained earnings is giving me 257,620. So that is what I have. Then the rest of them is filling. There is no revaluation surplus in this question, but there is share premium, which is 7,000. My equity share is 25,000. All right, 25,000. So it means I can add my equity up. So plus 7,000 plus 25,000. Am I seeing right? Yeah, that is what it is. 25,000. That together is 289,620. So I have that one down. Okay. Then let's go to the top. What hasn't come yet? Inventory. There was no note on inventory. Inventory at closing is 19,600. 19,600. There was no note also on the receivable. So that is 51,200. The bank, I have 4,300. So let's add all my assets together. So if I add 267,120 plus 60,000 plus 19,600 plus 51,200 plus 4,300, I get a figure like 300. Let me see if it is that one. There is a slight thing inside there. Is it that something has not been recorded? Oh, okay. Minimum punch here, 60,000. Let me bonus 6,000. So let me punch the correct thing. Yeah, it now gives me the figure 402,220. So you can punch it and find out. Then you underline it twice. Nobody marks this figure anyway. The most important things are this one. This is just to give you an assurance. So this one too, we had the lease liability there. This was the figure. Then the bank loan in the question. The bank loan is 20,000. So bank loan 20,000. All right. So now we can now add up everything so far as everything has come to play. So trade receivables was what? 35,200. So you write your 35,200. So let's see if it balanced, because at the end of the day, there has to be a 220 somewhere. We already have the 220, but there's a 60B here, so 20B here. So this 80 will write off that to 0.8. So right there, you can have some confidence inside what you are doing. Okay, so that is that. So you have 289,620 plus 20,000 plus 26,220 plus 35,200 plus 7,200 plus 23,980. It balances squarely. So what I have here is 402,220. So that is how you solve a publication question. You see, even you and I doing it together, okay? Yeah, we. Assuming you joined the class at 6:30, which we didn't start exactly at 6:30. Have you seen that we've used less than 1 hour?
Yes, sir.
That is even when it is an interactive class. So we've used less than 1 hour. So if you do the approach that I'm telling you, so what is step one? Step one is draw the template of your P&L down, even without reading the question. Don't read the question first. You are wasting time. Please listen well. Don't read the question before you draw. And please write fast. Write as if somebody is chasing you. Because the exam, one fast speed and can't work. So write as if somebody is chasing you. Okay. Pa. Use like 3 minutes to do this thing down. Fast. Like somebody original also. So do that. Then when you finish drafting it, now come and read the question. When you read the question, you can also find out in the question, draw your template, leave spaces. Don't make it oh yeah, NCA natural PPE no. Now leave like 3 spaces before you come to the CA. When you finish writing those things, you can see the CA. The CA you can see in the trial balance. Leave additional 3 spaces. Equity, so the only trial balance in no throw leave 3 spaces because something must come up. NCL, which are the trial balance in here, leave 3 spaces. CL, leave 3 spaces. Then you start answering the notes. Immediately you finish answering the note, go and write. Yes, I'll cast a note in area. By the time you stop working, you have not even arranged anything in the P&L and the balance sheet. So please, that is that. That is that. So that is it. So I gave you another question.
Sir.
Yes, please.
Yeah, I wanted to take us to supposing the tax, there's a deferred tax in it. How will you do about it?
You do the same thing with length under IAS 12 now. You do deferred tax in the question. You do it. The year or IAS 12 now. You apply it. Let me see. Set question so no, yes, or I will get you one that there is a deferred tax in it. Yes, so that you see how we approach it. This was another question. This was part of what I asked you to do again, right? Set questions in the year 2. This one, did they have deferred tax? It still didn't have deferred tax. So please, the same thing you do. If there is deferred tax, do the DT aspect, do the movement, carry the movement to the P&L. The deferred tax balance you calculated, take it to your NCL. The same thing, what we did in the tax video, no, the same thing. Nothing has changed. Nothing has changed. All right, Ashla, Hetty did this one. She did this work. She balanced it squarely with 1 item missing. So I showed her the 1 item missing. Did you do that one too?
No, because the first one wasn't going well.
And what do you want me to do? Should we solve it together here? Or I should leave it for you guys to go and do it? You go and do it. You know what? Let's solve it together. Okay. Then there are extra questions. You might see. Let me tell you the truth. The questions that I've given you in the 2 books you guys bought from me, there is no way a question is coming that is not coming from that book. So if you have those books, practice the questions that are inside there. The solutions are there. Please, I'm warning you.
The test or the case.
Nimienu nyina.
Hey,
But you see,
boss.
the question in the test are also in the kit.
Okay.
So if you are doing the kit, do the kit. Please, I'm warning you.
Select some for us.
So, what you
Oh,
say?
but select some for us. It's a lot too.
No, for now you have to solve. The selection will be at the intervention stage because I've not had any word yet, but I know it's one of them.
Okay.
Yeah.
We are solving. We are
Yeah.
solving. Small.
Okay. So let's do this. Let's do this one in the next hour, Bina. So the same approach. I have not started reading the question. I have not started reading this question, but same approach. I will do my SPL down. So this one is called Positivo. All right. Then Positivo Limited. Then I will do the question. All you need to do is to read the requirement of the question. Understand? You are supposed to prepare P&L and OCI. So you do statement of profit or loss and OCI for year ended. What is the date? 30th September 2017. You underline. I'm not waiting for anything. Was this thing in triple zeros? Yes. They put, in fact, we don't even do double column for these things. It's just one column. So that is that. I will do start revenue, cost of sales. So this is a typical exam question. You see, those things that will require adjustment, they put the notes there. So like this one, you know, revenue, there is no adjustment on it. Fast. Yenche kra. Fast. Oh, yeah, there is no adjustment on revenue. So you put it there straight away. Cost of sales, all right. That one, the open, there is always an adjustment. Then gross profit. So you have other income, other trading income. I'm starting this work at 7:30. All right. Then we have the expenses, admin expense. There is no note on admin expense. There is distribution expense. There is no note on distribution expense. So I can slot it there. Distribution at 53730. Admin, there was no note. So 44. Even if there is a note later, I can come back and cancel and write it nicely. So there is no point. So loan interest is there. Finance cost, convertible. So you continue. After these things, research expense. Then what do? Profit, operating profit. So we call it, so write operating profit. You have investment income. Finance cost. I've not read the question fully, but I'm doing it. Then what I will get after that is profit before tax. Then I will do my tax and get my profit after tax. This is IAS 1. So you just do it. Then OCI part, at this level, you only have revaluation surplus. So you ask me, deferred tax on revaluation, if any, you deduct it. So you see, I've done this thing in 3 minutes right now, 3 minutes. I've done it in 3 minutes. After reading everything, I know I have ordinary preferential revaluation surplus equity, 6% loan note, 5% loan note. These things are there. Income tax, inventory bank. I see all these things. I will draft my, I will draft my balance sheet fast. You see the way I'm writing, it's like somebody is chasing me. That is what I want you guys to practice. So you don't relax. Say, after outro, PSSITVO. No, you don't do that. Write as if somebody is chasing you. This is exams. So statement of balance, financial position. So you write fast. Please, take my advice. Oh, me, I'm talking to you from experience. All right. As at 30th September 17, rightly underline, just one currency sign. I start with my NCA. Fast. I know definitely there will be PPE inside the question. Okay, I'll leave 3 spaces because I don't know what is there left. I come to my CA. I know that inventory is there. I know that receivables is there. Trade receivables, bank. There may be other things, so I will leave 3 spaces. Then I come to my equity side. So the equity side, I have stated capital, which is also called ordinary capital. I have what else? Share premium is there. There is revaluation surplus. Forget the handwriting, okay? Retained earnings. So as in, write as if somebody is chasing you. I don't know what might come after, so I will leave 3 pages, 3 lines. Come to my NCL. NCL, what do I have in there? I have 6% loan note. I also have 5% convertible. All right. Is there any other? I don't know yet, so I will leave. 1, 2, 3. I come to my CL. I know CL starts with trade payables. All right. Then taxation. There may be lease liability. I don't know, so I leave these 3. I am done. So you use 2 pages of your answer booklet to do these things. Immediately you finish, you now come to note workings. So you come and do your workings. All right. Then you start note 1. So now let's come to note 1. Included in inventory are some, so this one is IAS 2. So ladies and gentlemen, my ladies, if you have not learned the IAS 2 well, you won't succeed here. It won't work. That is the sincere truth. It won't work. So now we are told that the inventory here, included in the inventory, what is our inventory? Inventory per trial balance. Per the trial balance, the inventory here is what? 64,320. They said that included in this trial balance, this figure in the trial balance is 25,000. Following damage of that are taking place during the year, it is now thought that the item will be sold at 30,000, but only after a repackaging cost of 8,000. So it means we have to come and apply IS to lower, of course, the net realizable value for that particular 25,000 item. So let's take away that 25,000 from this. Okay, there are 2 ways you can do this. Oh, the other way is that maintain this 320 here. So now with this approach that I'm doing the 2 approaches for you. 64,320 minus the 25,000. That gives me 39,320. Now the 25,001 is an inventory. So we are told that those inventory has a cost of 25,000 and it has net realizable value of 30,000 minus 8,000. So that is the net realizable value, which is what? Which makes it what? 20 is 2, right? And we said you need to select the lower of cost and net realizable value. Which one is lower? Is it not this one? So we will rather add the 22. Okay, and therefore that gives me plus 22,000. That gives me 61,320. That is what my inventory should be. If you do it like this, it is cool. You can also decide to realize that, you see, what we are losing from this is 3,000. Is that not it? 3,000. Yeah. So you reduce this thing by 3,000. Is the same way you will get 61,320. Now this 3,000 is an impairment loss. It will go to cost of sales. Yes. I told you, to everything you do here in the note, something will go to the balance sheet. something will go to the P&L. So don't rest if you've not found those things. So what is going to our P&L is this 3,000. And this is now the carrying amount of our inventory. So immediately we see this thing from our workings one, we will create a cost of sale note. You don't number that note. Don't number the cost of sales note. Don't. Not yet. So you say per trial balance. How much do we have? What is the cost of sales in the trial balance? 339,000. Then we will add the impairment on inventory. On inventory, which is 3,000. So right from here, we have done the one going to the P&L. Then straight from here, go to your balance sheet and slot in the figure for your inventory. You don't waste time. So inventory, you say workings one. It was what? 61,320. So maybe me note one. I've solved my note one. This one. So now I go to my note two. What is note two about? It says that land and building was revalued to 450, including land 100, from their previous carrying amount of 375 on October 2016. The revaluation has already been recorded. So it means it is not our job to record it anymore. But the depreciation is yet to be charged. At October, the building's remaining useful life is 35. Then the plant and equipment is to be reduced it will be depreciated by 20%, reducing balance. So we have the land and building here, the land building valuation. So we have land and building. Then we also have plant and equipment. We are told that here the land and building, what we have here is the revalue figure. So that is what we have. So we don't really know the cost. We don't really know the accumulated depreciation. We are not giving, but we are giving the revalued amount. So we will start with the revalued amount because the revaluation has already been recorded. So you can also decide to do 375 and revalue it to 450, whichever way you do it. But since the revaluation figure has been given to you, it means the accumulated depreciation is useless. You don't need it for anything. You don't need it for anything. So what is going to happen? What is going to happen is that we have the figure here to be what? 450. Because the revaluation is at the beginning of that year. Then this one, we had cost. What was the cost? Plant and equipment cost is what? 265,585. Then the accumulated depreciation is there, which is
63,400.
So if we deduct, what is the figure we are having? So 265,585 minus 63,400. That gives me 202,185. Good. Then we are asked that reducing balance. What is the rate? 20%. So we will do 20% of this figure. So multiply by 0.2. It's what? 40,437. Yeah. So we can get our carrying amount safely. What is the carrying amount?
161,748.
161,748.
748, yeah.
All right. So immediately we have the depreciation for the year. You go and add it to the cost of sales. It's 40,437. So this is our cost of sales. Wow. Cost of sales is been too much. So I have depreciation. I have on P&E 40,437. What about the land? This is the land. From this side, they said the remaining useful life is 35 years. So it means it will be 450. Whenever a land is revalued, we use the remaining useful life. Whenever anything is revalued. But you see, inside there, they said there is land. Is that not it? Which means that we need to take away the 100,000. So what we should be, What will be depreciation? Will be depreciating will be how much? The 350. Is that not it?
350. Yes, sir.
Exactly. So 350 over 35 years. So that tells us that that is like
10,000.
10,000. Yeah.
Yeah.
And please always check whether it's supposed to be 6 months, 9 months, that thing. Check.
Okay.
All right. This one is full year, until a muda. So it means our carrying amount will be what? 440.
340.
All right. So
And
this is it, right? 440. So the depreciation,
yes.
we need to go back and add 10,000 for the LMB. 10,000. Then what is the total carrying amount for the PPE? These two. So just do anything. Don't formalize it. Like I saw that Ashla, you were doing a nice table before that thing. You are wasting time. You are doing art. You are wasting time. Fast. Don't do any nice things here. Take the land and building, do what concerns it. Take the P&E, do what concerns it. Don't go and do nice table. Be a mepacho. Oh yes, I'm advising you. Wow, oh yeah, no cry. Ask yourself how many minutes did it take you doing those skills? So plus 161,748. So my PPE, I have 601,748. Is that what you also had? So straight away, PPE.
Yeah.
Yeah, in Hokra, 601,748.
74. Yeah.
So you refer the examiners to your workings too. Yeah, in we have already dealt with the depreciation too. It means workings too is gone. That's all. So we come to note 3. So note 3, what is in the note 3? Will we get something to the cost of sales again? You can see nothing from here goes to cost of sales. Nothing from convertibles, IFRS 9 go to cost of sales. Nothing from IFRS 16 go to cost of sales. This one to nothing go to cost of sales. So we can immediately, you can look at it that notes now can be anywhere better cost of sales in it. So you will close your cost of sales. What is our cost of sales? So you see the speed with which we are doing this thing. Into when we crowd ticks. Don't go there to try and balance anything. Go there to collect your ticks. If it balances a plus. So if I add these things together, what I'm having is a 392,437. So quickly, if I have seen my 392,437, I added these things together. Then what I need to do is to go straight 392,437. So please, immediately on that same calculator that 392 is on, you will minus it. Don't clean your calculator and come and point 656 and so on. It is already on the calculator. So just do minus. You get a negative answer, but you know in your head that a through the to see a form the end. So 5,000. I'm getting right like something like -1, but I know the negative will not stand because I just did it the other way around. So that is that. Fast. Yenche kra. Fast. I already know this, and per the question I've read, there is no research expenditure, there is no other trading income. So the same answer that is on my calculator, instead of doing minus, I will do plus the negative here because my answer on my calculator is negative already. So I'll do plus 44810, right? Let me check if the figure that I've written is correct. 44810 plus another 53,730. So what I'm having here is 74,023. Fast. Yenche. Fast. Quick. Now you move on to the other notes. So you see that we have about 3 notes to go. So let's see. Note 3. You see, I've not numbered my cost of sales yet. But immediately I know that everything here is up to 6. I can number my cost of sales to be note 7. Because that I've told you that's the last note you do, note 7. And go and put inside what I did here, note 7. Working 7. So the examiner will go and look at that. All right. If you do the workings right, say be out 932 437, I will throw us wrong. 932473. He will mark you correct from here. So please, the notes there, you can't do away with them. All right. So now let's do the note 3. Note 3. Note 3 is about what? IFRS 9. You can see clearly. So it says that Positivo issued 6% loan notes at October 14th. Of course, we are doing this thing at September. That means that this is at the beginning of the year. They were issued at the nominal of 70,000. They will be repaid at the premium in 2024. The finance department have calculated the loan to have an effective rate of what? 79%. So initial measurement, we will need the nominal value. So here, my advice to you is that, look at this. Whenever you see this, that this thing is 70,000, go and look at the trial balance. Okay, just look at the trial balance. You see it's 6% loan note, is that not it?
Mm-hmm.
You will see the 6% loan note here. 6% loan note. The thing was 70,000. Have you seen that you are having 74,000? Which means that you can now start with your subsequent measurement straight away. So you pick this one that is here. The balance brought down is 74,389. You can do it yourself to get the 74,389. You can do it, but it is done for you. Balance brought down is there. So you come in with your finance cost. Finance cost, well, what is the percentage for the finance cost? What is the percentage for the finance cost?
9%.
9%. So do the 9% immediately. 9%. So we have 0.09 multiplied by 74389. So that is that. I am having 6695.01, but I mean 0.01, we don't need it. Which percentage do we use for the payment? Which percentage do we use for the payment side? This one too, you have to go and watch your IFRS 9 video well. You have to. Very, very important. You use the coupon rate here, the 6%, on the nominal value of 70,000. So 0.06 by 70,000. And you see it's 4,200. You go and see the 4,200 in the trial balance because they paid it. You will see it. This is it. That is what they paid. If they have not paid, that interest here is a payable. It will be a payable. So now that we know this, we are going to minus our 6695. All right. So we do 74389 plus 6695 minus 4,200. So we will have 76,884. All right. So that is that. Now, what does that mean? This one is going to my SPL finance cost. This one is going to my NCL. This is IFRS now. We don't do 2 years. So straight away, finance cost. So from my workings 3, I have 6695. So that is from my workings what? 3. All right. There is another one. So there might be another finance cost. So you just pause on that. But you know that the value of your 6% loan note in the balance sheet is, is 76,884. So workings 3. TN right away, we are done with note 3. We found the two figures going to their respective places. Then we come to the convertible. If you've checked your IFRS 9 video very well, you see how we deal with the convertibles, that you have to do your initial measurement. So workings 4. Initial measurement. You do what? The PV of the payment. All right. So it started in 2016. All right. So you could see, if you go to this one, the only thing they gave you here is 100,000. 100,000. Would that 100,000 be what we have? No, because it's a convertible. So you can't take this figure and work with it. You can't take this figure and work with it. You know, convertible, there is an equity option. So what do? How much is the payment? So how do you find the payment? The payment is 5% on the 100,000. And you see it here again, 5,000. So how many years are they doing this thing for? How many years?
It was 4 years.
4 years. So starting from 2017, it will be 2017, 2018, 2019, then 2020. So you saw that it will be 2020 reading. So the first year you pay the interest, which is 5,000. The 5,000, how did I get the 5,000? This one is the interest payment too. It's not finance cost too. It was 5% on 100,000. Please take your standard video seriously. All right. So every year 5,000. But the last year we will pay the 5,000 and we will pay the principal. Okay, and it is here. I don't know bet me catch you say principal no will be at a premium or at a discount. Here it says that it is redeemable at what? At par. So if it is at par, then it means it's the 100,000. So you pay the 100,000 plus the 5,000. And you know, monko have video ni be more. The discount factor we are going to use is which one? Which one will we use as our discount factor? You see, he has given you 5% and 8%. Which one will you use as the discount factors?
The 8%.
The 8%. It is all coming from that video. So please. For Shedapan or Dinimi Numa, you get somebody who you use the 5%. So you get the PVs for convertible. You get the PVs. Now let's do the PV. 5,000 by 0.93. That gives me 4650. This one, the second one is 5,000 by 0.86. That gives me 4,300. The second one, 5,000 by 0.79. 3,950. Then the last one is 105.
So 105. 76,600. 650, sorry.
76,650.
650. Yeah.
If we add all of them together, what will we have?
89,550.
89,550.
550.
So when we compare it to the nominal of 100, this is the liability component. The equity component is what? The difference is what?
10,450.
10,450. So this one will be added to our equity. So ahanso yenche. So when you see this right now, equity no. So I think Hetty, I know now one fan can hold. You realize that the figure that is not making your thing balance, it was that figure. So when you do the difference and you see that figure is somewhere, just go and add it. You realize what if free move and say, figure we crash and who pay you. And no one can now the other home. That's all.
Okay.
So immediately we go to our balance sheet. Right from here now, equity stated capital. Stated capital here is 100. So we will put in here 100,000 plus 10,450. That 10,450 is coming from is 450. It's coming from my workings 4. So you realize that you have 110 450. But wait, and Sakra and subsequent measurement for this thing. Okay. The subsequent measurement, we will do the subsequent measurement for only this part, for the liability part. So balance brought down 89. You don't even need to do nice work. Just show it there without even showing the thing. So finance cost is 8%. Is that not it? The same rate now we use here now. So 89550 by 0.08. 7164.
Yeah.
Which will go to our SPL. And the payment is also 5,000. So yeah, Tifri Marebenya saying
91,714.
91,714. So 91,714. You see, I didn't even put headings anywhere. Yeah, pentem.
Okay.
Yeah, man, how many hokra and church balance? No. Me pentem. But I've numbered it. It is under workings for. So immediately I pick this figure, the 91,714 to the other one. This one, 91,714. Then my finance cost now 7164. That one to straight. 7164. So here plus 7164. So you ask yourself, apart from that, is there any other finance cost in the question? No. You see, these two things are those finance costs that have been replaced. So immediately I can add 6695 plus 7164. That is giving me 13,859. It's a finance cost. All right. So that is that. Is there an investment income? There's a note B here. So we have to go and look at that note to see. So that is the next note we are on to, note 5. Note 5. What is note 5? We had a financial asset. A financial asset that we have here, you learn IFRS 9, financial asset. So is that a financial asset is held for trading purposes. So what kind of financial asset is that? Fair value through P&L. It's held for trading purposes. If you remember, we did financial asset, amortized cost, fair value through OCI, then fair value through P&L. They are all in the IFRS 9 video. So initially, the investment was how much? We said that the investment, the balance brought down of the investment is 130,000. Then the balance carried down, according to the notes, is 150, right? 150. So it's fair value through P&L. So that is the question, even said it here. So 150, which means that change in fair value is going to the SPL of what? 20,000. So immediately, this is the one going to my balance sheet. So investment, financial asset. So you see the space that we left, a swap for NCA financial asset is what? 150,000. That is coming from my workings 5. Then the income of 20,000, investment income, workings 5. 20,000. So right from there, I have what I want. So I have 74,023 plus 20,000 minus this. I have 80,164. The last one is the tax, and that is note 6. That is note 6. Okay. There was a revaluation surplus, but the question said that they had recorded it already, so we just dump it. It was a copy and paste. The revaluation surplus, how much was that? 145,000. So it's just copy and paste. With that one, we just do straight 145,000. If there is no revaluation surplus during the year, you can even cancel this out. There is no need for you to even do it. You can just copy it into your balance sheet. What is our tax? Note 5. Note 6, sorry. So let's do our note 6. Tax, you will do CT DT. All right. So what is the estimate? Esla, are you asleep? I could hear you are tired.
Say I'm here.
I could sense you are tired.
Mm.
The estimate is 24,000. Then it says that the one in the balance sheet represents an over. So you know that this one goes to the CL. So on check straight away, go and put it in your CL. So tax working 6. So 24,000. Men chewa honkra and lose that mark and You see, right now, from right here, even before I continue, I know that nothing is said about trade payable. So I can come and copy my trade payable and paste, which is 69,650. I can just paste it. I could also see that nothing affected my trade receivables. So that one too is how much? 480, 48,670. Then nothing also was said about my bank. So that one too is 29,885. If I have finished doing this part, I can add it up fast. And so I'm about to see my balancing figure. So I have 601,748 plus 150,000 plus 61,320 plus 48,670 plus 29,885. I have 891,623.
Yeah.
That is what I have. So you see,
Yeah.
I have no now we say our own. Now be our down for bit now trusting her. Shall we balancing figure near say? Obama our now mura. That is it. Nothing affected our share premium. We can copy share premium 30,000. Revaluation surplus 145,000. Retained earnings, we are yet to do that year's own. So here is what 1,285,611. All right, plus the one that we are about to conclude. I think that is the only thing left. You see, we understand. Say how. So once we started this thing at 7:30, and bro 30 minutes grand here, baby, you. Means so many money you. In the exams, I said use 30 minutes. We have some few minutes left. So on the way I may add, and that will be time. So that is how it is. Now, it says that what is the tax? Where is the tax? Where is the tax? Where is the tax? Income tax. It's at the credit side. Is it over or under? If it is at the credit side, is it over or under?
It's over.
Over. So if it is over, minus 2150. Movement in deferred tax. So, Hetty, if there had been deferred tax, you do balance brought down of that deferred tax. Then you come and calculate your own balance carry down. So balance carry down and call NCL or NCA, depending on whether it's a liability or it's an asset.
Okay.
Okay, then the difference between the two will be the movement you bring here. But here there is no movement. So it's 0. So what is the figure we have here? 24,000 minus 2150. So it gives me 21,850, which is going to my SPL. All right. So straight away, SPL 21,850. So tax minus 21,850. So what will we get? So 8164 minus that. I have 58,314. You can decide to add it to this one if you want, but we don't mark total, so nobody is interested. Leave it and go your way. So here we have 58,314. So I'll add the 58,314. 58,314. So what does that give me? Plus 22,85611. That gives me 343 925. So you could see right here, minyan kambo, but I could see that we mienu, we nkwama me 9. Me ade we can be 3 we pie. Right there, I start gaining confidence. So let's add our equity part, because the equation is asset is equal to cap equity plus liability. All right. So we've done the A part. Let's do the equity part. So we add 145,000, we add 30,000, we add 110,450, right? So that gives me 6,229,375. So I now add my liabilities to it. So I add 76,884 plus 91,714. All right. Then I add again 69,650. Then I add again 24,000. It's inside, it balances. So even if it doesn't balance, go to the next question. Don't spend time running through. Don't spend time running through. So we have 819,623, 819,623. So in the exam, if you do up to this point, it doesn't balance, don't move on to the next question. Don't waste time. See, minimum but we have used maximum like 36 minutes. So please practice, okay? Practice. So my good friends, so the ones in the book, you see that the solutions are there.
Okay, we'll check.
Oko publication part now. Part C, publication. You see this one. These are your questions. Try and solve them. The solutions are there, but you try and solve it yourself and compare the solutions. You see the solutions? All right.
Yes, sir.
Try and solving them. That is question 1. You have question 2. Millie. These questions have not been tested by ICA yet, but they are in the book. But these questions are also in the other book. All right. So please. And this one, question 3. Question 3. All right. All these things are solved for you there. Question 4. If you're able to solve the questions in the book, you are ready. Even if what you learned didn't come clear, you'll be able to do something. All right. So please, question 5. And all the solutions are also there. Question 6. Then you come to cash flow. All right. So it's either you get the publication question or you get a cash flow question. So what I'm going to do, God willing, tomorrow is I'm going to leave you bare in the Ahomache. I will not meet you Ahomache. What I will expect you to do is that use that time to watch the cash flow video and try your hands on cash flow questions. Please, when you finish, do the cash flow question and send me the solution. I mean, say cash flow question na wo adenim na say solution ni wom dada. Until you people will copy and paste. But I want to trust on your integrity.
We'll try.
Yeah. Do that. Okay. And I've also you say what? Yeah, under Pasi.
Okay.
Yeah, cash flow 2 is under Pasi. I've also sent you the 2 videos on consolidation. So I expect you. So what I'm going to do is that make jam this week. Now find here because we are done. Oh, if you want those videos finished, we are done. The only thing left for us to do is ratios. But I want to be meeting you after that so that we solve questions.
Yes, sir.
Yes, sir.
So I will leave you to bear, even if I'll meet you. So maybe I'll meet you on Sunday evening. When I'm meeting you, I'm not teaching. It is my belief that you did the cash flow and we are going to solve a question on cash flow. I have a mock question for you. I'm sending it on your platform. Practice it. Let me see what you can do about that. And we will, when we meet on Sunday, we will solve just that question and add one cash flow. Then we will be done. Is that okay?
Yes, sir.
So Esla, you can go and sleep. Also, I'm watching another video. So I. And so on koda o go he movie o. And only ask them no.
Oh, me share movie o. TV family bi will have me share movie.
Oh, sir.
It's a new place I'm a movie about.
But so laptop.
Laptop ni kwa man be fie.
I see. And the way they have videos, no, use your phone.
I have a tablet I use for class and for the videos.
Oh, okay. Where's your tablet? No, telenovela be any so there.
She crying. It's what's it? Tablet me use because me same nature than near Juma. Ne have me.
Okay.
The start classes now me call 5.
Oh, all right. So that is it. Practice some 1 or 2 questions be on your own. All right, then you'll be fine. But my worry is that you have to be fast. Okay, speed, Esla, I don't know if you are somebody. The way you talk, Hetty, I can trust Hetty. But Esla, the way you talk, that is my worry. The way you talk means that I say I don't know obey atwa don't know.
Oh, Dad.
Sa intifa gidi pan why? Time yourself, okay? Time yourself. All right.
Yes,
Thank you very much, guys. I'll see you on Sunday.
Thank you, sir.
Sir,
Yes, please.
please turn off the recording.
I think I have. Okay, sorry.